Okay. All right. In the previous class, we have actually looked into the new topic, industrial building allowance. We have gone through the what it is, the definition, and we look into the definition of the factory, whether it's included or not, and what is a factory. All right. On top of that, the next one we are going to look into other buildings. All right. Remember that industrial buildings are only eligible if it fulfills the definition. Yeah. But previously we see that buildings here are factories, all right, any building used for manufacturing purpose. But we also see that later that other buildings will also be included as industrial building allowance. Yeah. So in your textbook, for example, on 4.0, there are circumstances where buildings are to be treated as an industrial building, right? So why do you need to understand this subtopic? Because you want to see that given a scenario, you have to check whether that building is industrial building or not. If it's an industrial building, then that will be part of your computation. If it's not, then we call it as a non-qualifying building, right? So when it's a non-qualifying, then you cannot take that value or the cost into your computation because it's not entitled for the industrial building allowance. All right, the first one is building used for staff welfare. All right, so where there's an existing industrial building, any additional building incurred such as canteen, restroom, recreation room, lavatory, bathhouse, bathroom, washroom, for employees' use shall be treated as industrial building expenditure, right? So that's very clear. So whenever you have all these building which is for staff welfare, that is also an industrial building. So you put together and compute in your determining your IBA. Then we also have building for living accommodation of employees. So under this topic, we have several subtopics. All right, so it means that, for example, in the farm, if you are a farmer, all right, and then you build, all right, a living accommodation for the farmers, right? So that building is also known as industrial building. Yeah. But remember that in order for this to be industrial building, the building is likely to be of little or no value to any person except in connection with the working of that farm. So it means that living accommodation means that if you are not in the farming business, that building has no value, right? So that's it. And then later you see that we also go into agriculture allowance. All right, this is another topic. Now we are doing industrial building allowance. Later we go into agriculture allowance. It means that those in the agriculture business, they can also claim agriculture allowance. So if that agriculture business has a building which is used for living accommodation of the employees, all right, then the building can also be claimed under agriculture allowance. Right, it's better because the cost of annual rate is, I think, is 50%, which is higher, right? But you have to decide whether you want to claim that as industrial building under this industrial building allowance, or you want to claim that under agricultural allowance. Right? Of course, the second one is better because the rate is higher. Okay. The next one is that when you construct for employees' quarters, all right. So in this case, it's not specific, where it's in general, right? If a business construct a building for the purpose of employees' accommodation, right? So that building is given is an industrial building, right? And is given an initial allowance of 40%. Yeah, so normal we have an initial allowance of 10% and AA of 3%. But for the case of employees quarters, we are given initial allowance of 40% and annual allowance normal 3%. Right? But in order for it to be an industrial building, you must make sure that that living accommodation only for factory workers. You cannot have a director, you cannot have an individual having control of that business, or a member of the management, admin staff, or any clerical staff engaged in that business living in that accommodation. If you have all these people in that accommodation, then the building is no longer an industrial building, right? You cannot claim allowance on that. Yeah, so you have to make sure that only factory workers are allowed to live in that accommodation. right? And the initial allowance of these is 40%. Then you also have for living accommodation, if you are in the business of manufacturing, hotel or tourism project, or any approved service projects. Yeah. So, and then you provide accommodation to your employees, whether you purchase or you construct, and then you use that building for living accommodation of your employees. So in this case, it doesn't say that the we get to earlier, right? So this one, no initial allowance means that IA is 0%, but AA is 10%, right? So of course you don't have to remember all these things, but I want you to be aware that there are different types of industrial building that give you different tax rate, different initial allowance, different annual allowance. So you take note of that, right? And then if there is a computation, of course you can refer to the rate, but you should be able to know that different business or different industrial building have a different tax rate. All right, and the next one is the living accommodation for employees who are working in the childcare facilities. All right, for example, you have a kindergarten, and at the same time, you provide accommodation for the employees, all right, for the carers. So again, that whatever living accommodation provided is a industrial building. But remember that the building must be constructed or purchased, because if you rented out a building or any room, or and then you incur expenditure, so that one is not allowed. That is not qualified expenditure, because that is not capital expenditure. That is a revenue expenditure. That one you claim under normal deduction. Yeah. All right. Again, there's no initial allowance, but 10% allowance, annual allowance. Then you have the school, educational institute, you have private hospital, you have building for research purpose, you have storage of goods for export. All right, again, this one is no initial allowance, but 10% annual allowance. Public road and ancillary structures, building used in an approved service project, similar to the earlier. Building used for hotel, and then you also have the airport. All right, the airport, not only the building, right, but also include the runway and or ancillary structures in addition to an airport. So all that is an industrial building. You also have the motor racing circuit, right? So I'm not sure whether we still have that in Sepang. We have Old Folks Care Center, 10% annual allowance, and then we have approved MSC status company if they have a building or they construct a building. So that building falls under industrial building, 10% annual allowance. We have company with a bio-nexus status, right? So if they have a building, so that is also an industrial building. We have privatization project and private financing scheme. We have kindergarten here, all right? We have childcare center. So just now is the accommodation for the employees in the childcare center, but here is the childcare center itself is given a 10% allowance. And then we have building in the Tun Razak Exchange. All right, there are a lot of buildings there, especially in the finance and banking institute. Okay, so all these, all right, we have about 18 subtopics under other building, which are regarded as industrial, not industrial building. All right, so be aware of this, but of course, again, normally we don't really test you, but you should know. All right, remember that the knowledge is not only for exam purpose. All right, you should have the knowledge for the knowledge purpose. You have the information for your knowledge purpose. Okay, right. So next is the more important topic, which is how to decide on your qualifying building expenditure, your QBE, right? QBE, qualifying building expenditure. It means that you can incur expenditure on the building, but you have to decide whether that expenditure is qualifying or not. Qualifying here means that it's qualifying for you to claim industrial building allowance, right? So the first one is that what is qualifying building expenditure? It means that any expenditure incurred, all right, capital outlay. Capital means that any revenue expenditure is not qualifying, all right, on the building, and any incidental cost exclusively related to the building. All right, so it includes, when the term includes here, it means that it could be more than that, right, which is not listed here. But normally we have the architect's fee. So if you were to purchase, when you have a building, either you purchase a building or you construct a building. So when you purchase a building, right, it's very straightforward. So whatever the amount stated in the SPA, that would be your qualifying expenditure. But if you construct a building, then you have a lot more expenses, a lot more costs, which has to be considered. All right, for example, you have the architect's fee, all right, cost of preparing plans, then you have to obtain approval from local, all these needs costs, all right? You have to pay for it. All right, authority to erect the building, and then cost of clearing the old site, including demolition of any existing building. Cost of construction includes labor, material, haulage, management, supervision, and other overhead charges. Interest expense on loan borrowed to construct the building till its completion. So we're talking about interest expense. So if you were to borrow money from the bank, okay, you have to pay interest on the loan. So this, with regard to industrial building, there are two phases. One is the phase where during construction, and then once it's completed, all right, you still continue to pay the loan to the bank, right? So remember, the loan comes with the interest. So during the construction, the interest expense is capitalized. So when during construction, whatever interest expense that you pay to the bank, that will be part of your qualifying expenditure. But once the building is completed, all right, the interest expense now become a revenue expenditure, which is deductible in arriving to your adjusted income. Okay, all right, and then we have incidental expenditure on work which may be separately contracted, example drainage, installation of water and electricity. So all these costs, all right, is part of the construction cost. And then we have cost of installing fittings, wiring, electricity supply, fans, aircon, and equipment. And then we have legal charges, yeah, stamp duty connected with the acquisition of the building, right? And this is very important, where it says that the cost of the land and legal fees relating to the acquisition of the land would not qualify for industrial building allowance, yeah? Anything to do with land is not allowed, right? Another one is that legal expense, all right? Remember that when you want to borrow money from the bank, you have to pay legal expenses on the SPA of the loan, right? You have a contract on the loan, you call it as a sales and purchase agreement, or sometimes you can get S&P, yeah? So you have to pay legal expenses for the loan to be processed. So that legal expense, because it's on the loan is a capital, right? So that one is not part of the building, right? But legal fees in acquisition of the building is allowed, right? There are two. One is for you to acquire the building. One is for you to acquire loan. So loan is not allowed, but anything to do with the building is allowed, right? Of course, you have a loan to buy building, but there are two separate contracts here, yeah? Okay, so let's look at here. You have safety manufacturing. So normally you're given a scenario, then you have to decide which costs are the qualifying ones. Once you identify that cost, total up, so you have one amount which is your qualifying building expenditure. So for example, here in July 2020, the company is a manufacturing safety belt. So it's a manufacturing. So it's clearly that if you have a building in the manufacturing business, the building is an industrial building, right? And then you have year end 31st December. So careful also the year end, because you have to look at when you incur. Because remember that when you talk about construction, right, sometimes it takes more than 1 year. The cost is spread over several years before the building is completed. All right, the construction is completed. So I have to look at when is the date of the not acquisition lah. When did you incur the expense lah? Yeah. So in July 2020, so it means that year end 31st December, so it means that this is YA 2020. All right, it completed the construction of its factory at the following cost. So we have the land 580, legal fees, agreement for purchase of land, and agreement with the building contractor. And then you have consultant fees and building plans, stamp duty for purchase of land. We have construction costs and land and factory costs, right? So given this total is 2.2 million, right? But you're required to compute what is the qualifying building expenditure, the QBE. So again, you have to look at, all right, you have land is excluded, right? Legal fees for the land is also excluded. And then you have building contractor. That one is okay. You have 10, 80. What about stamp duty for purchase of land? You cannot. All right, because that is for the land purpose. So that one is excluded. And you have the construction cost of 1510. So taking to 1, 2, 3 items only, all right, 1, 2, 3. So you have one out of 2.2 million, only 1.6 is your qualifying building expenditure. Right? As I mentioned earlier, interest expense on loan, borrowed to construct. So there are two parts. One is the during construction, that is your QBE. But once it's completed, you're going to claim that as a deductible expense. Okay, when you come up with the boxes here, it shows that these are for the previous year's loss. Remember that previous years, we have two GST element. All right, but it has been abolished, and now we come back with the sales and service tax. So that one is, if you look into the previous textbook, you will have this. Yeah. Okay. 6.0, when talk about constructed building, the QBE includes cost of construction and then subsequent capex on construction, extension, alterations, and renovation. And you also have the initial repair. So sometimes you you purchase a building, for example, or when you construct, you have to initial repairs too, macam demolition, all these things, all right, which enhance the value of the building. So all this will be part of your QBE, right? And then we also have the 75% rule, right? 75% rule under industrial building. So what it is actually, let's see, 75% rule here. So I make a summary here. It says that capex incurred on PCTL, right? What is PCTL? The preparing, cutting, tunneling, and leveling. We have come across this when we did our plant and machinery. But the rule on the plant and machinery, PCTL must be less than 10% for it to be an qualifying plant and machinery. Okay, qualifying plant expenditure, yeah, QPE. So it has to be 10%. But when it comes to industrial building, for it to be a qualifying expenditure, it must be 70% rule, right? So it says that when the land, the cost of preparing, cutting, tunneling, leveling to prepare a site for the installation of plant machinery for the purpose of business. So when you have a building, you also have to incur all this PCTL, right, in order for you to install any plant. So you have to go back, all right, look at what is the cost of the plant and machinery. You have P, and then what is your PCTL L, and then you look at the total cost E, right? So if the L is less than 10% of E, then E is plant and machinery. So total E, you claim plant and machinery means that the AA is 20%, IA is 14%. But if your PCTL or your L is more than 75%, is 75 or more of E, then E is QBE. So everything is qualifying building expenditure. So what happens is that you're going to claim IA and AA based on the type of building that you are computing. However, if the L or the PCTL falls between 10 and 75%, so it could be 15%, it could be 50%, it could be 60%, then L is a non-qualifying. All right, so it means that what is left is only cost of plant machinery, so that will be part of your P and plant machinery. So you claim your plant machinery for that item. So question, anything that you are not clear here? Faham tak? 75% rule. Okay, let's look at the example in the textbook. All right, we have example here. Wong Wei Sdn Bhd is in the business of manufacturing toys, and then the company on 1st June 2020 bought one machine which is to be installed. So you buy a machine to be installed in Shah Alam, then you incur the cost of leveling the site. That costs you 260,000. So then you have to check whether the PCTL, the 260,000 that you incur, is it qualifying or not? Or is it qualifying as a plant machinery, or is it qualifying as industrial building, or is it non-qualifying? So you have to do the 10% and 70% check. So kalau 10% maknanya the cost must be 34,500 and below. So it's in this case, it's 260. So what is 75% of the cost? 75% of the cost is 258,750. Right? So how you compute 75% of this E, of this total? Yeah, of these 345,000, 7% is 258. So for that, all right, you know that, okay, PCTL is more than 258, which is 216, right? So because of that, so this one is more than 75%. So once this one is more than 7%, the whole thing now, even though you have the machine here, but the whole thing, 245,000, is going to be your qualifying building expenditure, right? So it started from a plant, a machinery, but then it turns out to be qualifying building, because why? The PCTL is more than 75% of the total cost. Okay. So then once you know that it's 345,000 is QBE, then you are going to claim IA and AA accordingly. So that's the implication of you deciding how much is the QBE, then you compute your IBE. All right. In the second example, you had a cost is 100,000, the plant and machinery is 100,000, but the PCTL is only 200,000. Total cost is 300. So 10% is 30, right? But here you have more than 10%, 200, yeah. And 75% for you is had 225, but you only have 200,000. It means that this 200,000 falls between 10 and 75%. So when it falls between 10 to 75%, the 200 ringgit PCTL is a non-qualifying expenditure. So you cannot take that as part of your cost. Therefore, your QPE is only 100,000. Right? QPE tau, bukan Q building, the plant and machinery. So you claim 20% and 14%. Okay? Right. So that is on the 75% rule. Do you have any question on this? Is it clear? These two examples make it very clear lah. How is actually you determine whether it's 75% or not. Yeah. Okay. So that is on the 75% rule. Then we have, okay, when talking about a building, right, you can have a building, but part of the building is not used as industrial building, right? So when we say that it's not industrial building, it may refer to, it's used as a management office, yeah? Management office is not industrial building purpose. So if you have an office or you have an area where it's not being used, that is also included into this, yeah? So you have to look at the whole cost of the building. So you say that if the portion of non-industrial building usage is less than 10% of the total cost, then the whole cost is an industrial building, right? For example, I have a whole building that cost me 100,000, all right, but the office area, all right, the cost of the office is only 8,000. 8,000, which is less than 10%, which is less than 10,000. 10% of 100 is 10,000. So if the office area is only 8,000, it could also be in the form of square feet, for example. You have the whole square feet of the building, and then how many feet used for non-industrial building. So you can check if it's less than 10%, because less than 10% is the area is too small, then the whole building is known as industrial building. Yeah, but if, all right, the non-industrial building area is more than 10% of the building, then you have to apportion as industrial building accordingly. So we have to say, okay, katalah for example, 20% office, 80% is industrial building. So for your QBE, it's only the 20%, the 80% portion. Yeah. Okay. As you can see just now, different types of building may have a different allowance, different initial and annual allowances. Generally, if it's not mentioned, it's not specific, then the rule is 10 and 3%. But you can have accelerated capital allowance, for example, IA 0%, AA 10%. You can have IA 10%, AA 6%. You have IA 40% and AA 3%. So it depends, all right? So they provide you a summary of all these type of building and the respective rate. You don't have to remember everything, all right? But you should know that there are different types of industrial building. There are different rates for different types of industrial building, all right? So you have to apply the rate accordingly. Okay, this one is a rental income, all right? Means that if you have a building, all right, if you have a building but the building is not used, you're talking about who can actually claim industrial building. Yes, the owner, provided that the building is used as an industrial building. Yeah, but if the building is not used, then the owner cannot claim. But if the building is rented out, right, no IBA can be claimed by the owner. So in this case, if you rented out the building, but the building is not is rented out, so the owner cannot claim, even though the building is used as industrial building. You get that? So you have a building, all right, and then you rented out the building. So you rented out the building, and then the tenant used the building as industrial building. So in this case, who are going to claim the industrial building allowance? The tenant. All right, depending on the cost incurred by tenant, the capital expenditure incurred by the tenant, all right, in making the building as industrial building, right? But there's an exception. If only less than 10% of the whole IB generate rental income, then you can claim industrial building allowance. So let's say that, for example, you have a building, right, and the building is an industrial building. So you use it for industrial building. It's just that less than 10% of the building does not generate rental income. Sorry, I got it wrong. If only less than 10% of the whole industrial building generate rental income, then you can claim industrial building allowance. So this one is very rare lah. Yeah, very rare. But we'll see if we have a question on this, and then we come back to this, right? Because it's a bit confusing here. All right, if you are renting an industrial building, so you are the tenant, right? You can claim industrial building allowance. All right, provided that, of course, provided the building is used for industrial purpose. Yeah, so tenant can claim IBA on capex incurred by tenant. So if you only pay renting, all right, rental, you don't have any expenditure incurred, you don't have any renovation, anything, so you cannot claim lah industrial building because you don't incur capital expenditure. You only pay rental expense, which is revenue in nature. But if you incur capex, for example, you have to, in order for the building to be used as a factory building or as an industrial building, you have to do some renovation, all that. So that is the capex that you incur. So you can claim industrial building allowance on the capex incurred, right? So tenant claim IBA on the capex incurred by the tenant. Right? So later we'll see that if you have a disposal, you still have to compute BA and BC, balancing charge, balancing allowance. So you have to decide what is your disposal value. Normally is the market value at the date of sale. So normally it's clearly mentioned, or net proceeds of sale or transfer, whichever is greater, right? So you have to take, because disposal value must be the one greater, all right? Most likely it give you a balancing charge, right? But remember that net proceeds of sale or transfer assignment, which is sometimes building, for example, you receive insurance compensation, all that. So that is a capital receipts. So if you dispose of the asset, the building, then you have to take it could be the insurance compensation. Yeah. All right. So let's look at the examples in the textbook. Right. We get to this is 19.6. Where is 19.5? We have done that. 19.6, we have this question, right? In this case, question 19, example 19.6, you have to determine which one is the non-qualifying expenditure and whether the cost of PTLC, is it a qualifying or non-qualifying? And there are some part of the building which is used as non-industrial building and building within curtilage. So this example, how much time do we have? 11:09. Right, so we have here example 19.6. You have Malaysian Paints near Berhad. A company manufacturing paints for the domestic market has been carrying on business for several years. A building complex in PJ used partly as a factory and partly as an office. So you see there are two types. One is a factory, the other one is an office, which is a non-industrial building. Right, was constructed by the company at the following cost. You have cost of land, legal fees and stamp duty, 1,000 related to the land, architect's fee, cost of terracing and leveling of land, cost of internal roads, construction costs, and wiring and plumbing. Okay. The building was completed and brought into use in September 2017. Okay, so year end, when is the year end? Tak nampak lagi. The company used 1/11 total of the area building as an office. So they give you in the form of 1/11. So 1/11, is it less than 10% or more than 10%?
Less.
Less than 10%. So bila less than 10% means the whole building is an industrial building. Yeah. So that's the rule that you pakai tadi lah. When you say that if the building is less than 10, non-industrial building is less than 10%, the whole building is an industrial building. A year end is 31st of December. So this one, and then on 30th June 2017, the construction of warehouse in Shah Alam. So initially the building is in PJ. Then you are the building in Shah Alam warehouse for storage of raw material for manufacturing process was completed. The total construction cost, including cost of land, 50 was 250,000. So you have to decide whether this warehouse is it part of the industrial building or not. In 1st September 2020, the whole building in PJ was sold to another company, Amalgamated Industrial Berhad, for 400,000, of which 150,000 relates to cost of land. Right, so at the disposal of the building in PJ, right, and then you have to compute whether it's a balancing charge or balancing allowance. State with reason whether each of the above expenditure qualify for industrial building allowance. Okay, so you have qualifying building expenditure would be made up as follow. Right, the first one is cost of land is excluded because land is a non-qualifying expenditure. Right, then we have legal fees and stamp duty. But stamp duty here total is 7,000, but any 1,000 related to the land, so 1,000 is non-qualifying, so you only take 6,000. Architect's fee is 10,000, that is qualifying. And then you have the cost of terracing and leveling of land. So you have to check this, right, of the total cost later, whether this one is qualifying or not, right? So you see that later, this cost is less than 75%. Because of that, the cost is a non-qualifying expenditure. You have cost of internal roads, 50,000, construction cost, 155,000, wiring and plumbing of 5,000. So they take up 6, 10, 50, 155, and 5,000. So you have 226 as the qualifying expenditure. From total of 377,000, you only have 226,000 to be qualifying expenditure, right? All expenditure connected with land, example cost of land or site, legal fees, stamp duty relating to acquisition of land, and cost of terracing and leveling land does not qualify. Since the part of the building used as an office is less than 10%, the whole building is used as industrial building. The construction of warehouse in Shah Alam does not qualify because it's not within the same tutelage as the existing factory in Petaling Jaya. So actually this thing we have covered in the first class. All right, and the others we covered today, so you should be able to look at the example here and then decide what is the qualifying building expenditure. Okay, so I will stop now, 11:13. All right, I want you to continue. All right, please read in advance example 19.7. All right, and then continue with the reading, and then you have rental income here, 10% rule, right? Just now I've covered this 10% rule, and 19.10 is a very comprehensive. Make sure that you do these, right? Example 19.10, right? In order for you to do 19.10, you have to read first, whatever is below here, all right, below that. All right, so we continue the class next, all right, with all these examples. It's very lengthy, and then we also have 19.11. All right, and then hopefully we can finish in the next class, all right, this topic. So with that, I think that's all for today. Any question?
Madam,
Yes.
if there were demolishing costs for the old building to construct the new building, is it
Yes, it
considered
is a qualifying. Yes.
All right.
It is.
Okay.
Anything else? No question? Okay. So please promise me that you will read first and then only we'll check, we'll discuss the examples in the next class, inshallah. I think if there is no question, please make sure that you sign up for the attendance in the classroom, normal classroom, yeah. You have 2 attendance today. One is the quiz and the other one is for your class. So I think with that, if there is no more question, I have to end the class today, right? Please fill up the attendance before you join the other class at 11:30 if you have. So with that, I think that's all for today. Assalamualaikum warahmatullahi wabarakatuh.
Thank you, madam.
Thank you, madam.
Thank you, madam.
Thank you, madam.
Okay.
Thank you, madam.
Thank you, madam. Thank you, madam.
Yeah, Shafiq.
Madam, I already submitted the quiz within time, but I need to check with you if mine is submitted.
Hold on, yeah. Shafiq. Shafiq Zulkifli. Yeah.
Ada.
Yes.
Okay, thank you,
All right.
madam.
Thank you, madam.
Yes, thank you.